Hi, I'm Kenny Klaus, and this is State 48 Homeowner.
Hello, everybody. This is Scott Kooiman, and we are back here with Andrew Lee. Welcome back, Andrew.
Thanks for having me, Scott.
So we talked last time about the umbrella coverage for insurance. We talked about what kind of coverage people have, but I was reading an article, and I don't know how accurate it is. I'd love for you to tell me, but it said that like 3 out of 5 homes in America are underinsured.
That's 100% true, especially with today's market and construction costs and all your supply chain
stuff. Which is bizarre to me because I think most homeowners still have a mortgage.
Yep.
And so their mortgage obviously is going to tell them that they have to have a homeowner's coverage. So how can everybody be underinsured?
You can be underinsured by not using the right replacement cost or rebuild value per square foot.
Okay.
So wherever you are, you need to have your agent should contact you. If they haven't done a great job up front, then they need to follow up and say, hey, last year your home value, your replacement cost was $320,000. This year it's now $400,000. Just with the way everything is, cost of labor, cost of materials, like it's now $400,000. And so when you tell people that and you say your premium's going to go up because of it, most people, they hate paying more for insurance because they say, oh, I've never had a claim in 10 years. And it's like, well, that's why you have insurance, for that one time when you do.
And, thinking about it, the lender's requirement for you to have homeowner's insurance on, when you have a mortgage is to protect their collateral. And I guess when I think about if we're underinsured, if their only requirement for it is to protect their collateral, it's not necessarily protecting me as a homeowner and as a person that's living a life in Arizona.
Right. Yeah, no, today there is rampant underinsurance in the market. Like you said, 3 out of 5 homes in the U.S. are underinsured by an average of 20% below full market value. And so a lot of people can just go online now and quote their insurance, but they don't know what they're buying. They don't know why it would be beneficial to have a sufficient limit. They're just playing with the buttons until the premium is to where
it's like, I like that payment,
is to where they want it to be.
Which, to your point that you said, I haven't had a claim in 10 years. This should be fine.
Right. And this report too that we were looking at here, it kind of goes into that, and we can talk a little bit about that. What happens, and it's a psychological problem, to be honest with you, and for that exact reason, the report reads, the problem is that policyholders rarely have a full grasp of the risk that they face. The reasons for this are part financial and part psychological. It is the result of recency bias, a common psychological tendency to make judgments based on recent events over those that may or may not have occurred in the past. If a policyholder hasn't had a loss in 30 years, then they assume they won't have a loss in the future. This assumption is simply not true. Insurance protects against events that are, by definition, rare but devastating.
That makes sense. I'm 47, and I've lived and have been alive for 47 years, so I probably shouldn't assume that because of that I'll continue to be alive for another 47 years.
Or for the next 47
I
years.
Mind. It'd be nice if it worked, but,
Or for the next 47 years that you're not going to have an insurance claim.
Yeah.
Just because you haven't had it in the past 47 years, don't assume that the next 47 are going to be as golden. And so I think that contributes a lot.
So how do people know that they're underinsured?
It all comes back to the rebuild cost in your area. Figure out, if you have a construction company that like and trust, or if you can get a hold of somebody, find out what the rebuild cost is. Your agent should know that and should review policies every year. That's another thing that contributes to the underinsurance is, unfortunately in my industry, A lot of the agents just renew as is. They didn't call me. My client didn't call me. They didn't tell me they had anything new. So yeah, we'll just renew for another year. Premium went down. They're happy. I'm happy. I'm not going to call and check and see if anything is new. So if you haven't spoken with your agent, if you haven't had your policies reviewed, please take the time to do that and make sure that you don't fall victim to being underinsured.
Yeah, and letting your agent know that something has changed, that there's something that's of higher value. Yeah, your premium could go up, but it's probably worth it.
Right.
When you look at the alternative to not being able to recover what you've lost.
Right. And that's always the risk, right? Is you want to acquire new things, and then to insure it, you feel like it's not worth it to pay the extra, several $100s or whatever it is to protect that asset that you bought.
So one thing I wanted to talk to you about in Arizona, very different. So I grew up in Southern California, and out there, if you're not in a city, you're in a county, and there is a county fire department.
Right.
And when I came out to Arizona, the first house I bought out here was in Santan Valley, which is county. It's Pinal County. And I looked all around. I couldn't find a Pinal County fire department because in Arizona, they just don't exist. But we do have a private fire department. One of the most common is rural metro. And so if you're in Santan Valley and haven't been annexed by the town of Queen Creek, or if you're in Mesa and you're in a county island, you're going to need to have a subscription with rural metro.
Right.
And it's something that people don't know. We always let our clients know that, but not everybody knows it. Not everybody has a subscription. So if the house catches on fire, they will come and work that fire and try to put it out.
And the subscription isn't that expensive, is it?
No, it's not. Generally, it depends on the square footage of the house. And it's the entire square footage. So their square footage will include the garage, whereas when you look at tax records, that square footage does not include the garage.
Okay.
They're going to do it everything that is under a roof. And so like a covered patio would be included in that. But a few $100, $500, somewhere in that vicinity, $600 a year. But if you have a fire or a medical issue and they come out,
right,
and you don't have that subscription, then they'll actually bill you. And it could be $60,000, $70,000 to put out your house fire.
Right.
So, is that something that if somebody didn't realize or didn't want to, they wanted to roll the dice and not have that rural metro subscription and something happened, is that something that their homeowners insurance would cover the cost of?
This one is in the gray area of insurance. And so some carriers might just say, hey, we got the homeowners policy on it. That is included as fire department. We'll pay it. Some may say, no, we're not going to pay it. You're responsible for that. And some won't even let you bind the policy without showing a certificate showing that you are subscribed to rural metro. I just bound an account down in Santan Valley actually a couple weeks ago, and I wasn't able to start the new policy until I had that certificate showing that they had a subscription.
Yeah, and I mean, I'm sure that there's people that have an internet company insurance, that isn't, they're licensed in Arizona but not familiar with,
right,
some of the outlying areas, and they just think all Phoenix is alike, and they don't know that we don't have county fire departments out here.
Right. No, 100%. So yeah, it's definitely one of those things that your agent needs to advise you of a possibility. That this could happen if you are not subscribed, that you could be stuck with the fire department bill in the event that they have to come out to your place.
The Klaus team is different. With the Klaus team, you have someone on your side. Where you live and make memories is important. We have more unique strategies than anyone else to help you accomplish what matters most to you. We can help you with traditional real estate as well as other options such as our lease purchase programs. We can help you buy first then sell, and we can bring you instant offers. We're here to help our neighbors achieve the American dream and help them build wealth through home ownership. For more info or to start your home search, visit us online at klausteam.com. So what about issues where maybe I've made changes to my home while I've lived there that have reduced the fire safety that the insurance company is assuming? An example, I've seen a lot of people that put a doggy door on their fire-rated garage door. What happens if we have a garage fire that extends into the home and changes like that are made? Or somebody has changes out their attic access to a non-fire rated attic access panel.
Right. That one, I've talked to several restoration contractors before, and I've gotten the response of, your insurance policy is as good as your claims adjuster. Mm-hmm. And so for ease of use, it was something like that. If you're tampering with fire rated stuff, that could be grounds for, hey, we're not going to pay the full amount, or we're not going to pay it at all. So definitely, if it's structural, if it has to do with any sort of fire safety, something like that, don't try and tackle that yourself. Don't get some help. Make sure it's done right. And again, document. Talk to your agent if anything changes, or if you do have a reduction like that. I do my best to stay in contact with all of my clients, to follow up with them. Hey, does anything change? Do we need to do anything? But sometimes it'll go months without it. So just beware as the consumer of, hey, I need to contact and make sure that I'm properly covered for XYZ project that I'm looking to do.
Okay. How do people, if they realize that they're underinsured, what is the remedy?
Again, you just want to contact your agent and tell them, hey, I want to increase my limit on my home, on my coverage A amount. I think I'm underinsured, and whatever the premium change is, it is. It's not like they're gonna rake you over the coals for if you added $100,000 onto your house. It may be a few $100 extra for the year, but at least you have adequate coverage if you were to lose everything.
So what are some coverages that people tend to add?
That is a great question, and something that I wish everybody knew about, because I come across these a bunch as I'm looking at policies from your bigger house, bigger shops, bigger insurance carriers that everybody knows because of famous people. But a couple
of the duck and the gecko.
The duck and the gecko. Peyton Manning's also another good one. And
there's some jingles out there.
And there's some jingles. Yep. And somebody's on your side. I can't remember who it is.
Discount double check.
Yep. Yeah. So a couple of coverages that you want to add that aren't included on every homeowner's policy are backup of sewers, drains, or sump pump. So I know in Arizona there are houses that have some basements, and there may or may not be a bathroom down there, but that's definitely one that you're going to want to add. So any damage that results from water or anything coming back up through a drain, that's coverage that you're going to want, and those limits.
And even I've seen where it's like a wash basin just in the basement, and sewage backs up, and they said, well, I didn't know I had a bathroom in the basement. Well, you do now.
Right. So that's a good one to add. You want to add your building code upgrade and demolition costs. So if something happened to your house and as it was getting rebuilt, if the city you were in mandates a new ordinance that wasn't required back when you purchased the house or when the house was built, but now you have to include it, you can get additional coverage for that, and that goes 10, 15, 20% of your coverage A amount that you can get on top of that. Identity theft, you can get that. Credit protection, you can get that. The personal injury that we talked about in the last episode with the umbrella.
Or not necessarily physical.
Not necessarily
injury.
Physical, no.
Could be emotional, could be...
Yep, you want to make sure that that's included. If you live in an HOA, you're going to want loss assessment coverage. And what loss assessment is your HOA has an insurance policy. They have a general liability policy, and they're responsible for all the stuff within the neighborhood,
area,
community. Well, if they got sued for a claim and they maxed out their limits, let's assume they didn't have an umbrella, which some don't, but they maxed out their limits at $1 million, and they needed an extra $200,000 to cover, the $1.2 million claim. Well, that $200,000 now gets passed on to you as a resident of this HOA, and that loss assessment, that's going to give you coverage for that, so you don't have to come out of pocket for that coverage. So it's super neat. Again, it can be included. Sometimes it's not. So just look at it. Make sure that you have that if you live in a community that has an HOA.
Especially the smaller ones, because it's not going to... I live in a massive community,
right,
and so it would get diluted. But the last neighborhood I lived in had 133 homes. And, it wouldn't get diluted as quickly.
Right. So, yeah, you can imagine that one, everybody's got to pay $2,000-3,000 out of their pocket to help cover that claim. And then the last two, which I think are some of the most important, are your service line coverage. So the service line protection is for items that provide services to your home, such as gas, water, electric, cable, phone lines.
Because I'm responsible to the street.
Yes, you're responsible from your home to the street. And so if anything happens in that, you probably get a bunch of stuff from the city, because they try to partner with some people to sell those service line policies just for that. But you can include it on your homeowner's policy and get limits of $5,000, $10,000, $15,000, $25,000 to help cover that. At the end of last year, I actually used that coverage. On my homeowner's policy, we had roots that grew into our sewer line. And so, fortunately, we had that coverage to be able to dig up, replace the line, put back everything. They had to tear up my sidewalk, so they paid to replace the sidewalk that they had to tear up just because where our sewer line was.
Now, was that a sisu tree?
No, it was a ficus.
Oh, it was a ficus.
I know, just as bad though, just as bad. But we're glad that we had that, or else we'd have had to come out of pocket, $10,000 to get that fixed and replaced. So definitely include that. And then the last one is equipment breakdown. This one, it looks good. The insurance carriers know that it doesn't pay out that often, but it definitely looks good. It is for your AC unit, your hot water heater, your refrigerator, washer, dryer. Some carriers will even include your TV and things like that. It's different from a home warranty side of coverages, because a home warranty can cover wear and tear. Your equipment breakdown on your homeowner's policy won't. It needs to be what they call a sudden cause of loss.
Okay.
So electrical surge or something burst, or it just can't be, my AC unit's 15 years old and it just went the way of the world. That wouldn't pay out for the equipment breakdown.
Well, that's interesting. A lot of things that we talked about, I can be honest, I didn't think about, especially the alternative to the home warranty.
All right.
So do most insurance people do like an annual review to make sure that everything's in line, that people are getting... Because I think a lot of people assume they have coverage for everything and don't know how to read their policy. What's the best way to approach that?
You should be in touch with your agent at least once a year I try not to be the once a year agent with all of my clients to talk to them, because sometimes it's like, hey, yeah, your premiums went up this year. That's a bad day. It's a really good day when it says, congratulations, you're
covered.
you're going to pay less than last year, and that claim that you just filed, you're covered. So you definitely want to be in touch with your insurance agent. And if you don't have one, please reach out to us. I'd love to apply to be that insurance advisor for you. And if you have a trusted one, then great. Just make it a point to be in touch with them and let them know if anything has changed in your home, in your life, or if you've purchased anything.
And what's the best way for people to get a hold of you?
They can get a hold of me on my cell phone. It is 928-245-20